In this video, we'll be going over IRS Form 1099-B, proceeds from broker and barter exchange transactions. So if you participate in the stock market, if you buy or if you sell things like CDs, bonds, treasury bonds, anything through a stockbroker, or if you participate in barter transactions, then either your stock brokerage firm or your barter exchange should issue you Form 1099-B at the end of your tax year. So in this video, we'll be going over this form step by step and then covering some frequently asked questions about it. If you'd like, you can also read the article that we've written about this form, where we go into a little bit more detail and we cover some items that we don't cover in this video. So we'll put the link to the article in the show notes, and we'll cover that at the end of this video. So on the left-hand side of the tax form, you see the taxpayer's information, the financial institution or the broker, the barter exchange or the broker is referred to on this form as the payer, and then the taxpayer is referred to as the recipient. So at the very top, we have, in this case, for our hero John Doe, we have Acme Financial Services. We have their taxpayer ID number. We also have John Doe's taxpayer ID number. In this case, it's truncated. However, there are 4 copies of this tax form. Copy A goes to the Internal Revenue Service. That copy of the form is not truncated. And then there are also copies 1 and copy 2 for state tax purposes. Towards the bottom part of this, you'll see the taxpayer information. This would be yours. So you'll want to review this to make sure that it's correct. In this case, John Doe, his street address, city, state, and zip code. And then there's an account number. The brokerage firm doesn't have to report your account number unless they are issuing multiple copies of the same tax form for the same taxpayer for different accounts. So if John Doe had 2 different brokerage accounts for the same firm, then you would see the account number appear here with an account number for each unique account reported on that form. And then below, if he sold a debt instrument such as a treasury bond, a municipal bond, or a brokered CD, you would see the QSIT number here. This box that's checked FATCA filing requirement, if this is checked, that means that the payer is reporting on Form 1099 to satisfy internal or account reporting requirements under the tax law. And it also indicates that the taxpayer may also have a filing requirement as well. So if that's checked, you may need to file IRS Form 8938, which is a separate tax form dealing with foreign accounts. We'll shift over to the right-hand side of this form, and we'll come back down to boxes 14 through 16 towards the end. So before we start with box 1A, we're going to take a look at the applicable checkbox up here on Form 8949. So Form 8949 is the tax form used to report sales and other dispositions of capital assets. So in this case, there is a box code marked D. This indicates that this is a long-term gain or loss transaction, and that the Acme Financial Services is reporting the tax basis to the IRS. So in our article, we break down all the different codes that you might see here and what they might mean. But in this case, we're reporting a long-term gain. The proceeds and the basis is being reported to the IRS. And that means that John Doe should report this accordingly, either on his Form 8949 or on Schedule D, or both. So in box 1A, is a simple description of the property. So in this case, 100 shares of ABC Corporation. In box 1B, we report the date that it was acquired, January 1st of 2020. John Doe sold it on January 5th of 2023. So if you're familiar with the short-term versus long-term asset treatment rule, or capital gain and loss treatment rule, anything held for more than 1 year, in other words, 1 year plus 1 day, is considered a long-term gain or loss. Anything that's held for 1 year exactly or less is considered a short-term gain or loss. So short-term gains and losses are treated as ordinary income items. Long-term gains and losses are subject to preferable long-term capital gains or loss treatment. So in this case, we can clearly see that this is a long-term gain or loss, and we'll see it reported throughout the form. We'll kind of annotate that in a moment. So in this case, the proceeds minus commissions or any other transaction costs are reported here. He made $10,000. In box 1E, it shows that he paid $5,000 on January 1st, 2020 to acquire this stock. If this were a debt instrument that he bought on an exchange, such as a brokered CD, and it was discounted, then you would see accrued market discount annotated here. So accrued market discount is a little bit different from original issue discount in that the face value of the instrument is lower than what it would be at maturity, but that's because of market fluctuations. Whereas the original issue discount is purposely marked lower than the face value at the maturity date from the issue date. So two different aspects. Original issue discount income is marked on IRS Form 1099-OID. Accrued market discount will be reported here. If this were a wash sale and it were required to be reported as disallowed, then you would see something in box 1G. So wash sale rules in the IRS mean that if you sell a security at a loss, but you happen to buy something that is substantially similar, either in the same account or in a different account, within 30 days, either before or afterwards, or if you buy a stock option for a stock that you sold, if you buy any security that is deemed to be substantially similar, then that's considered a wash sale, and that is disallowed for IRS purposes. So the IRS actually requires brokers that are able to capture characteristics of a wash sale to report them on Form 1099-B. So in this case, we have no wash sale loss, so we don't have to worry about that. In box 2, this indicates short-term, long-term gain or loss, or ordinary income item. So in this case, it's clearly a long-term gain or loss. It's reflected right here. And if it were reported as something different, if it were reported as ordinary, then that security may be subject to special tax rules. The example in the form instructions have to do with a contingent payment debt instrument subject to a special bond method that's treated as ordinary interest income instead of capital gains treatment. So if your financial institution reports ordinary instead of one of these two other items, then you may need to take a further look into how you would report that on your tax return. In box 3, if one of these is checked, then it means the proceeds are from either the sale of collectibles or a qualified opportunity fund, and they have slightly different tax treatment. So collectibles, they have a different capital tax rate that goes as high as 28%. Qualified opportunity funds, under certain circumstances, people who sell qualified opportunity fund interests may be able to defer part or all of that gain under certain circumstances. So that's why those boxes are checked. In this case, they're not, but that's why they're available. Box 4, federal income tax withheld. In this case, it's blank, but you can have you can voluntarily withhold taxes if you give directions to your brokerage or your barter exchange, or if you do not file Form W7, which gives the reporting institution your taxpayer ID number. So, or if it's the incorrect taxpayer ID number, then you may be subject to backup withholding rules. And under backup withholding rules, they are required to withhold, I believe it's 24% of your proceeds, not necessarily your cost, your proceeds. So in this case, John Doe would be, possibly paying $2,400 of tax, even if you look at this and see that it's clearly only $5,000 of profit. So if you don't file Form W7, then they are required to withhold federal income tax. Box 5, if this is checked, then that means this is a non-covered security. So really quickly, a non-covered security has different reporting requirements, or the institution reporting on it has different reporting requirements. So a non-covered security includes any of the following. A, stock that was purchased before 2011. B, stock in most mutual funds that were purchased before 2012. C, stock that was purchased in or transferred to a dividend reinvestment plan before 2012. D, debt that was acquired before 2014. E, options that were granted or acquired before 2014. And F, securities futures contracts that were executed before 2014. So non-covered securities, brokerage firms are not required to report certain information based on the reporting requirements that existed prior to those dates. For most transactions, to include this one, these are now considered covered securities, and there's a little bit more detail reporting requirement for that financial institution. In box 6, you'll see what was reported to the IRS, either gross proceeds or net proceeds. So the form instructions state that if the exercise of a non-compensatory option resulted in the sale of a security, then they would check the net proceeds box to indicate whether or not this was the box 1D, the proceeds were adjusted for option premium. So if you paid an option premium and that was reflected in the proceeds, then you would see this checked instead of the gross proceeds. This was just the straight sale of 50 shares of ABC Corporation, and they're reporting the gross proceeds on this. Box 7, if this box is checked, this means that you cannot take a loss on your tax return based on gross proceeds from a reportable change in control or capital structure that was reported in box 1D. So in other words, this is based on a change of control or capital structure, and that was the sale, so you're not allowed to take a loss on that. Boxes 8 through 11 have to do with regulated futures contracts, foreign currency contracts, and Section 1256 option contracts. So if you don't participate in options, futures, or currency exchanges, you're probably not going to see anything in these fields, in these boxes. So since there's nothing here, we'll put in some numbers here just to kind of help you visualize it. Please understand that this has nothing to do with the sale of John Doe's 100 shares of ABC Corporation. So in box 8, that shows the profit or loss based on contracts that were closed during the tax year. So let's just say that he generated a $5,000 profit here. On box 9, they're going to report open contracts. So open contracts that were open as of the end of the prior tax year. And in this case, 12/31/2022, there's an unrealized profit. And let's just say that that amount was $3,000. Now in box 10, that shows the unrealized profit on open contracts held at the end of the current tax year. So this will be an adjustment for so this amount will be an adjustment that's reported here in next year's 1099-B. And let's just say that that was minus $2,000. In box 11, this is the amount that is it's the aggregate amount of profit or loss on all of these contracts. So basically it should be the net sum of all of these, or $6,000. You would report this, if applicable, on IRS Form 6781 that specifically reports on Section 1256 contracts. Box 12, if this is checked, this means that the brokerage firm is reporting basis to the IRS, and either the short-term or the long-term gain box up here in box 2 has been checked. So box 12 is checked because the long-term gain box is checked. So if this is if there's no adjustment required, then you can refer to the instructions on Schedule D. You may be able to report your transaction directly on Schedule D under certain circumstances. If the ordinary box in box 2 is checked, then you may need to make some adjustments before reporting this on your tax return. And then box 13 has to do with bartering transactions. So this shows the amount of cash that you received, the fair market value of any property or services that you received, and the fair market value of any trade credits or scrip that was credited to your account by the barter exchange. So over here, back to the left-hand side, this is state tax information. If you live in a state where you don't have to file a state tax return, you might not see anything in these fields. So just to kind of help you conceptualize this, even though Texas is a state without a state income tax, we've populated these fields so that you can see it. So in this case, state name, we'll put Texas. State identification number is whatever identification number that this institution has on file with the state. And then in this case, we just simply withheld $1,000 out of this for state tax purposes. Again, this is fictitious. This wouldn't happen in the state of Texas or any state that doesn't have a tax. But there is room here for 2 states. So if you happen to be subject to jurisdiction in 2 different states, you can actually have 2 different states with tax information being withheld. So that's all we have for this video. We'll put links to the article in the show notes, as well as links to articles and videos that we produced about different forms, either mentioned in the article or mentioned in the video, or that are pertinent to this form. So we'll put links to all of those resources in our show notes. And if you like our article, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if you have an idea for something that you'd like to see in a future video, please hit me up in the comments section. Thank you very much and have a great day.